please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Midcap Radar. I'm Prashant Nair. With me is my colleague Reema Tendulkar. Reema, afternoon. 15 points on the Nifty. It's been that way since, the morning. Not really being able to, come up in any significant way and remaining off the day's high. I mean, the highs of the day were made early in the trade in the first hour of market opening. After that, it's been not weak, but almost looking like at any point it's going to start to give way. Banks, of course, are supporting. You heard Mr. Damodaran, the ex-SEBI chief, in conversation with Shireen on both those two issues. One is the Axis issue, the other is ICICI. Whatever else may happen, stocks are reacting positively now, at this point, with all that has happened over the last many weeks. So that's the quick comment. Reema, afternoon.
Afternoon. Quite a sedate day of trade, you would say, especially when you compare it to the big gains that we've seen across the Asian markets. If you plot the Chinese markets, there's been a late surge there. So China is now also rallying close to about 1.5%, moving in step with the Hong Kong market. And Europe, too, is continuing with the gains across the Asian region, similar to the Asian markets. So over there, you've got the CAC, DAX and the FTSE showing you gains of about 0.5 to 1%. So compared to the Asian markets and the global equities in particular, our markets seem to be underperforming. Let's invite Ashwani Gujral. He's here with us on the show. Ashwani, losing a bit of ground in the last few minutes, not doing too much, quite lackluster. How would you read the day so far?
See, it's just kind of sideways trading. I don't think too much can be concluded from today's action. But overall, the uptrend remains. Even if there was some sort of resistance, I don't think the market has been thrown off a whole lot from there. So maybe today we should remain sideways, and maybe fresh trend can only be gauged tomorrow. But I don't think the trend is compromised today. So we've hit the 50-day moving average and then consolidated. So chances are that tomorrow or at some point in the future, that 50-day moving average will get crossed. Having said that, Adani Transmission is a buy with a stop of 178, target of 190. City Union is a buy with a stop of 176, target of 188. And Delta Corp is a buy with a stop of 278, target of 292.
Okay, Ashwani, thanks very much. We will come back to you for more. And of course, Ashwani will be with us on the top of 230. 10,400 basically on the Nifty, 20 points higher. We will take a very quick break. We come back. We also turn our attention to what's happening as far as bond deals go.
Let's turn our attention to the bond markets. There has been a sharp surge in the bond yields in the last 2 days. In fact, it spiked close to about 20 basis points, currently hovering around that 7.33 mark. Today itself, there has been a 10 basis points increase in the bond yields. Dhaval Dalal, the CIO of Fixed Income at Edelweiss AMC, joins in now. Dhaval, afternoon. What has caused this sudden reversal in the yields? Till the RBI policy, it was trending down. Thereafter, we got voices which said that maybe we could even hit that 7% mark or go below it. And now suddenly we are back to 7.35.
I guess every bond market participant is perplexed with the recent uptick in the bond yield. But that said, should also be remembered that the decline from 7.80% of the peak level that we saw in early March to the low of about 7.15% was also equally sharp. And I think at certain level, market participants are awaiting a further market participation from PSU banks in the bond market. And what we are witnessing is that perhaps they are taking their own time to normalize their trading operation. And to a certain extent, the recent hardening of oil price and some amount of profit booking could be attributed to the recent price action that we have seen in yesterday and today.
Dhaval, hi, afternoon. Prashant here. This move up happening right after the policy, the RBI policy, should we interpret it as a way of the market saying that maybe, it doesn't particularly believe some of the assumptions the central bank is making with regards to inflation, etc.?
I wouldn't hazard that guess. I guess from a bond market's perspective, we had a series of good positive news developments, starting with the government of India surprising the bond market with a lower than expected borrowing program. and then RBI also chipping in, and the policy also giving a downward bias on the upcoming inflation. So I think after the recent gains, perhaps the bond market participants are asking what next. And now what we have is the next March CPI, which is expected to be around closer to 4%. But the kind of solid gains that the market has made over the last couple of days, perhaps some of the bond market participants are looking to take some chips off and waiting for the fresh supply. It's also being observed that market participants are perhaps rotating from the stock which has been auctioned and out of the stock which is likely to be auctioned, which is also resulting in some amount of widening of spreads in the bond market. But I think there's nothing significant to be worried about from what we see.
So according to you, what's next in terms of the 10-year yield?
I guess, see, in the absence of any negative news, market participants are going to look at external factors. And right now, we have seen that the U.S. bond yields are also hovering between 275 to 285, and the oil is also firming up. But that said, I think the RBI's monetary policy has $68 a barrel as an average oil estimate. So we are in the vicinity of that. So it is also not giving any negative impulse. So based on that, it all boils down to sentiment and some amount of profit booking that can be attributed. But from our perspective, we expect the 10-year bond yield to trade between 720 to 740 range for the time being.
Between 720, 740. Dhaval, what about the US 10-year benchmark? I mean, it was one-way move up. Now it's getting a little confusing.
I guess over there, the focus has been shifted to the prospects of the trade war and what it brings to the economy. Over there also, I think bulk of the market participants believe that it's all talk and no action as of now. So, but the equity market is getting really volatile because of the developments on day-to-day basis. But bond market is showing a very, very clear trend that perhaps any trade war is not going to be good for the economy, and from that perspective, the Fed perhaps will take a note of that and perhaps go slow on the prospective rate hikes. So in that situation, the bond yields will perhaps feel a very, very gradual upward trajectory going forward.
Thanks, Dhaval.
You got the market which is up a little bit more. I mean, from the time that we started at 130, I think we are up almost 15 points. So now 30 points on the Nifty, 10,407. The Bank Nifty is up 0.5%. Midcap index is up 45 points. That's about 0.25%. So there is a bit of pickup. And I think the advanced decline is also, getting closer to being evenly matched.
Actually, Wipro, we should get that up for you on your screen. There's been a sharp recovery in Wipro from the lows, close to about 3.5%. In the morning, it was down because one of the telecom clients filed for bankruptcy. It would have impacted their profits by 65 to 75 basis points. But as you can see on your screen, sharp reversal there. The client that they're talking about is likely to be Aircel. And, reports suggest that the deal could be just 500 crores. Convert that into dollars, it's $15 million. So it's not going to be significant for a company of Wipro's size. I guess that is what the analysts or the market community is coming around to believe. So it shouldn't impact their guidance in any way for the quarter gone by. They should still meet it, deliver revenues within the guidance, or even impact their guidance for the coming year.
Okay, I mean, that is actually a meaningful tick higher coming through, almost 1% up from the close, and of course, from the lows, I guess it's more. This flashes at the bottom of your screen. This is the finance minister asking the finance SECI, the financial services SECI, to consider the possibility of converting the GSTN into a government company. So that's interesting. Proposal to convert GSTN into a government company to be soon taken up by the council, the GST council. What would this mean? Why would they want to get this done? These are some of the questions that we put to our reporter Timsy, who should be joining us in just a bit. Do we have? Yeah, we have Timsy with us. Timsy, thanks for joining in. More details, please.
Yes, as you rightly mentioned, FM has asked Finance Secretary to examine the possibility of converting GSTN into a government company. FM has asked Finance Secretary to explore converting GSTN into a 100% government subsidiary or an entity with a majority government stake. The proposal is likely to be taken soon by the GST Council because the Council is the authority, final authority, to give its nod before this conversion happens. Secondly, Finance Secretary to also hold stakeholders meeting to finalize the proposal. The proposal could be either 100% or 51% and above, which is yet to be finalized, which will happen only after stakeholders meetings and conversations and suggestions. And yes, remember that currently GSTN is only a 49% company with a stake of center and state, and it is a private company. That is how it has been mentioned in the inception document. So that document needs to change, the entire shareholder pattern needs to change.
Okay, Timsi, thank you very much for that. As promised, we've got the management of Gravita India with us now, Naveen Prakash Sharma, the CEO of the company. Good afternoon, Mr. Sharma. You've started commercial production at your Chittor plant in Andhra Pradesh. If you could tell us what this will do for the company's financials, how will it help?
Good afternoon. We have started plastic recycling last year, and we have added a capacity of around 21,000 tons, various locations across the globe. Among that, we have started PP recycling, particularly polypropylene recycling at Chittur with the initial capacity of 1,200 tons, which we plan to extend up to 6,000 tons per annum. So this will give additional revenue numbers of around 40 crore on the revenue for the next financial year.
40 crores in revenue in this year, FY19 or next year?
18-19, yes.
And in terms of margins, I mean, what do you make in terms of margins on this business?
This business will have an EBITDA of 15%, and it will be an additional margin because we will be having our in-house polypropylene available from the battery recycling. So we'll further add value to this while finally making granule to the final end users.
So this is part of the 21,000 ton expansion program that you mentioned?
Which we have already, yeah.
And how much of that is already done?
So we have done around 19,000 tons. This is 1,200 tons we have added at Chittur. Apart from that, we have added pack recycling in Nicaragua and Jamaica in last year. And around 3 months back, we started PP recycling at our mother plant, which is Jaipur plant. So altogether, this is 21,000 tons, and we plan to add another 4,800 tons in coming time. It will make altogether 25,000 tons of plastic recycling.
When will this 4,800 tons of recycling come on board? What is the timeline?
Since we have put up this first line of 1,200 tons, so maybe once we get in steam line and start production, commercial production today, so maybe next quarter or by Q2 end, we will be having the complete capacity of 4,800.
So that's 6,000 tons in that facility.
Yeah. Yes.
Right. So what is the total, capacity then overall? Recycling.
If you talk about a group of recycling capacity, we will be having, by adding this capacity, 153,000 tons. Among that, we have lead recycling, mainly 125,000 tons, then aluminum recycling, 6,000 tons, and this 21,000 tons as a plastic recycling.
Okay. Mr. Sharma, could you give us some color on the cash in the company's books as well as the debt, because you are undertaking significant investments for expansion?
Yeah, see, that is mainly we are taking for the working capital requirement. Rest, expansion plan, we are taking from internal accruals. And since we are growing with a CAGR of 50%, so at this moment, we need to have that much debt for our working capital requirement.